Well, hello, everybody. My name is Lee Schwartz, and I'd like to welcome you to our webinar for veterinary practices. Today's topic is 8 ways to improve profitability and drive growth in your veterinary practice. Now, I notice a lot of familiar names on the attendee list. I know many of you have been a part of our past webinars, and we're excited to continue bringing you this important information. So we will jump in here in just a sec, but a couple of quick housekeeping items. If you have a question during the webinar, open up the chat box in Zoom and submit your question to all panelists. We're going to try to leave a couple minutes at the end for Q&A, but beware, we have a lot of ground to cover, so we will see. You'll also receive an email with the link to a survey afterwards, as well as our SVA resource page where the webinar recording will be available. Now, many of you are already clients of SVAs, and we'd encourage you to reach out to your SVA contact if you have questions coming out of this. I'd also encourage you to share our contact details with other practices or practice owners who could use our help. Over the last 20 months, we found that there are just a ton of practices that aren't getting timely or knowledgeable advice from their CPAs or their advisors. And obviously, we would be happy to talk to them and help. Now, if you're not a client and you have questions, please reach out to me and I will get you connected to a subject matter expert at SVA who can get those questions answered. Now, many of our clients have had banner years in 2021. So now is a perfect time to be thinking about how to improve profitability and drive long-term growth. If you've attended any of our past webinars, you're already on a first name basis with Andy Slinger, who's a principal with SVA. And maybe you're also getting to know Nate Drykosen. They're both in our healthcare and vet practice. Both of them help lead the team that works with veterinarians around Wisconsin and really the whole Midwest to help them minimize taxes and maximize profitability. So I will be back towards the end if we have some Q&A and to wrap up, but Andy, I'm going to let you take it from here.
Thanks, Lee. I appreciate it. Thank you, everybody, for joining us for what is now our last webinar of 2021, at least on the vet side. What a year it's been. Nate and I just really wrapped up yesterday our final meetings with our clients here going into the end of the year. Clients really love meeting at this time, just to see where they are tax-wise, where they are with their goals, what should they be implementing here going into the following year. So it's been really nice to have these conversations, and it's really timely because we can, in general terms, tell you exactly, where the market's at and what we're hearing from our clients. And, really the goal today, some of what we'll present, you'll be like, yeah, that hits home. That's really something I got to work on. Other things, hopefully you're like, I'm in good shape there. But, like with any educational opportunity you have, hopefully at the end you have 1 or 2 takeaways that you can take back to your practice and implement. Or maybe it'll be a couple of thoughts that, you'll want to continue the conversation with either your current advisor or maybe you'll want to reach out to us and continue the conversation. So that's really the big picture goal for today. To narrow it down a little bit, as we reflect on 2021 and what we've seen and heard in our meetings, I'd say our agendas have never been more full, which is a good thing. There's so much to talk about. There's so much on your minds right now. There's so many challenges that you're facing. A lot of them are good challenges. A lot of them are good problems to have, but still, there's a lot on your plate. So I could give you 10, but as I was preparing for today, the 3 main themes that we're hearing, okay, and seeing. Number 1, as Lee alluded to, it's record revenue and record profit. We're getting calls. I've never made so much money. Okay, I've never had so much cash in my bank account. What do I do with it? Okay, that's probably one of the number 1 questions we're getting. What do I do with this cash? Okay, and that's fun. It's fun to help you navigate that. And then number 2, the unfortunate problem, or fortunate, however you want to look at it, is I'm also in line to pay more taxes than I've ever paid before. And so again, that's a whole window of opportunity of, okay, what now next level tax strategies do we need to help you implement? So that's number 1, record profit, record revenue, and all the challenges that come with it. Number 2, it's across the board, it's staffing. Okay, and that one hurts, I know, but you're all facing it, and it's all over. It's at the associate level, it's at the reception level, it's at the tech level, and on and on. and you're all just navigating it as best you can. In some cases, it's holding you back. You know that even though you had a record year, you could be even doing more if you just had that associate. So that continues to be a challenge. And that's something that, again, we can't solve overnight for you, but Nate and I will today talk a little bit about just some things that may help to make your practice more attractive to potential hires, and maybe make your staff a little more loyal going into the future. And then lastly, a theme is everybody wants to know what my practice is worth, because again, you've never had more revenue, you've never had more profit, so that value is going up. You have maybe corporate practices, private equity knocking on your door. Okay, maybe you're flirting with them a little bit, doing some due diligence, but that's what's going on, is what's my practice worth? To sell or not to sell is a big question that a lot of practices are grappling with. It's hot right now, okay? The multipliers that people are willing to pay for your practice keep going up. They've never been higher. So people are just wondering, is this the right time to strike, okay? And you put all this together, you're also running really hard. You're tired, okay? You're working more than you'd really like to be. So you're putting all this together, and you're just wondering, is it time to just take the ownership hat off? Knowing that I could be an associate anywhere for a long time if I wanted to be. So that's probably going to be a whole separate webinar going into next year, because it's such a timely topic. But those are the three things that we're really seeing in the market right now. So to kick it off on that note, in our first topic, we want to do a poll question. And very simply put, because it's something that I'm going to challenge you with, looking ahead to 2022, how many goals have you set for your practice? Very simply, hey, haven't even thought about it yet? 1 to 3, or I got a lot of goals. All right, let's see the results. Okay, very impressive. So majority of you have established, overwhelming majority have established 1 to 3 goals. Some of you still in process. And then I am kind of happy to see, as I'll explain, that we don't have anybody in the more to 3 category. So let's get to that. Why is this important? So one of the things that we challenge our clients with at each meeting throughout the year is, right now it's, well, what are your goals for 2022? Okay. And tell you, to a T, every meeting when I bring that up, owners will write that down. Okay. Because everybody knows I need to move my practice forward. I need to improve on those things that are holding me back. So we challenge you. And as far as a number, I think a lot of literature will tell you, if you set 4 or 5 too many goals, you're likely to just not achieve any of them, or maybe just not to the level you should. And obviously you don't want to have no goals. And so that, I always say 3 is a really nice number, plus or minus 1, set those goals, make sure you have a plan related to them. Okay. So that's the goal, but how am I going to get there? And again, literature will tell you that anything more than 90 days, our minds have a challenge of thinking in any farther terms than that. So make sure you have benchmarks and checkpoints at that 90-day mark to see how you're doing with those goals that you set. Get your staff involved. Okay. I have found, and practice owners find, staff like this kind of stuff. They like the team concept. They really like to know, hey, where are we going? And they like the transparency of that, of where the practice is going, and how they can help be a part of that team to help you get there. Okay. So get them involved. And then, the last thing related to this one is, if you have that strategic partner, advisor, relationship, let them know. That way, like we're doing with our clients, they can help hold you accountable. You're so busy that it's nice to, every 90 days or 3 times a year, have that person come in and say, hey, how are we doing? Because it just naturally, we need that person to hold us accountable and help us move forward. All right. The next thing we want to encourage you to do is look at your fee schedule. Okay. Before yesterday, I had a meeting yesterday, but before yesterday, I would say for the most part, when we ask our clients about their fees, very commonly we'll hear that their heads will go down a little bit and they'll say, we know they're a little bit low. Okay. And veterinarians are overwhelmingly generous people. But I want to encourage you right now in this really tight market where all your costs are going up, you're providing better service than you ever have. Make sure what you're charging not only reflects your market, but it also reflects the value that you're providing to your patients. I was encouraged yesterday. I had a meeting and I asked this question to the owner, and she said, my fees are high, but we provide great service. And that's what our clients tell us. I love that answer. It was very confident. She knew her fees were where they needed to be. She also knew that her practice provides great service to her patient base. So that was a good answer. I challenge you to have that same confidence in what you're charging, knowing that you're getting, what your practice is worth. If you don't know where to start, obviously that service that you're providing one time a year isn't going to move the needle. So start with those services that you're providing most often, your top 5 or 10 service codes, see where they are and where they should be. Obviously compare them to your market. You got to know your area. Are you in a rural area? Are you in a more metro area? Are you in between? And if you find they're very low, you may not want to just jack them up overnight. You might, instead of doing a big one-time increase, you might do a more modest increase and then do them again on July 1st, or 2 or 3 times a year. In this next one, review write-offs, consider payment plans. A real key concept for any business of any type is, what are we giving away for free? I would love every business to look at that right now. What are we giving away for free? Because, if you're in business 10, 15 years, well, Sally gets this and Mark gets this and Joe gets this. Over time, you'd be amazed how much you find out that you're giving a lot of things away free. And you might be okay with that, but I at least encourage you to find out how much that is. And if you have the occasional, complicated procedure or patient that needs it, payment plan is better than no payment. Okay, so consider that selectively. And as 2021 has proven, you increase your fees to market, to what you should be getting, that falls right to the bottom line. It just bypasses overhead and goes right to the bottom line, and you're going to see your profitability be where it should be. Just real quick, I would say, we get a lot of questions. What should we be doing for a fee increase? Well, obviously it depends on where you're at. Are you already where you should be? Are you high? Are you low? But I would say if you're normally doing that 3 to 5%, I would say that based on the cost of your labor, the cost of your supplies, I'm seeing more 5 to 7 range for increase for 2022. Okay. Next one, expand yourself. This is very broad. Okay. So if you look at your practice, you have cash to invest in different areas. So what do we do? What's the next step in our practice? So again, consider your competition in the area. We've had practices that realize there's an opportunity to provide a certain service or a certain procedure that no one's providing. They've taken advantage of that. Maybe, you haven't had the funds to invest in that piece of equipment that can move the needle and bring in more revenue, to provide continuing education for your staff. So again, you can expand your services. This is the time to do it. Consider your market. Maybe you have staff that are willing to work a Saturday morning, or maybe you have patients that in our ever increasingly busy middle part of the day, maybe they'd love to come in early, or maybe there's a day where you expand your hours into the evening. Again, listen to your patients. And again, a lot of practices are just running out of space. And so again, this is the time with the cash, with the ability to borrow money at low interest rates and having great equity in your business. Banks are ready to borrow you money. Maybe this is the time for that remodel, for the expansion. Don't also forget the fact, if it's been years since you've kind of updated, the aesthetics and the look of your practice, make it a place that the patients just love coming to, and make it a place that your staff wants to come to and loves being at. Because again, every little bit is going to help to potentially attract, retain that staff. And if you have the staff, obviously you can attract, more patients in this really challenging market. So, really consider, everything in the aggregate, and look to see what investment you can make with the cash, with the availability to get financing, what's really going to help move the needle and just make your practice more profitable and more attractive to both patients and staff. Okay, with that, what I'm going to do now is I'm going to turn it over to my colleague, Nate Drakelson, and he'll keep it going.
Thank you, Andy. We'll start off kind of the next portion of our segment with a poll question. How often do you currently look at your financial statements? Never, once a year, quarterly, monthly? All right, well, it looks like we're maybe having a little bit of a compilation here with those results. So we'll maybe circle back around to this. So be curious to see what people's thoughts are, though, because that's always an interesting topic as far as what you're typically getting from your accountants and advisors. But what we're going to do with this section is break this down in a little bit more detail. In terms of the financial statements that you're getting, regardless of the frequency, what are some of the items that you should be looking at in particular? And broadly speaking, there's more or less three big categories that you could break down your income statement to. One being revenue, which comprises probably services for all of the different services you're providing. It may also have some other things. If you have an online store, all of your different product sales. If you're renting space to your groomer, that might potentially be mixed in with this top line item. Next section would be overhead expenses. Call this the middle section of the middle line. Break this down a little bit more detail by major category, and broadly, there's just a few different ones that kind of make up the overall overhead topic. And then lastly, owner compensation. What are the owners getting out of the clinic? Would that be salary, benefits, and then also looking at some of the residual income that's available to put to good use for personal or clinic reasons as well. So I think the first section we're going to look at is looking at how to rein in your overhead. So I mentioned there's a few different categories here, and I'm going to skip up and down a little bit on this slide, but broadly, you want to take a look at some of the big dollar items that make up your income statement. And the first one that people often think of is cost of sales. So this would be all your different inventory items, drugs, supplies, prescriptions, vaccines, microchips, you name it. It kind of falls into this cost of sales category. And for many veterinarians, this is just one of the biggest parts of their business to get a real handle on. And to some extent, you are a little bit at the mercy of vendors, but here's where having some expertise, a little bit of practice with buying smartly, taking advantage of rebates, having a good relationship with your vendor representative can really come into play and pay off big time for you. Next kind of big item in the overhead and expense category would be anything and everything related to staff. So be that staff wages, benefits, the payroll taxes that you're paying on their behalf. And then also you want to consider all of the investment you have in their continuing education as part of the staff expenses as well, along with any other like uniforms, expense reimbursements, that sort of thing. Lab is usually another big expense item that we would see on an income statement or profit and loss statement. And really this could be included with cost of sales as well. But it's important enough that, and some people do consider it a separate item compared to cost of sales, that we want to kind of address it on its own. You definitely want to take a look at what you're paying for lab fees. Feel free to shop around, feel free to process whatever you can internally, but it's definitely a huge item that you can use to look at your existing relationships with vendors. And then lastly, rent. Rent is probably the single biggest building related expense that is going to be on your income statement. And whether you own the building that you practice from or you're renting from a landlord, just making sure your rent's at a fair market value, making sure that the expenses that you're paying for as the tenant are comparable to what else is going on in your area can be really beneficial, and it can really have some big cost savings, because a lot of times rental agreements are based on some sort of multiplier year over year where that amount continues to increase into the future, sometimes based on what the prior year was. So then getting into this a little bit more detail and scrambling the topic a little bit, we're going to look at key performance indicators. And you'll see some of these really do overlap with the topics we covered in this last slide. The first item we'll talk about is total revenue. We mentioned understanding where your revenue is coming from. Is that from services? Is that from renting to a groomer? Is that from maybe some one-off projects that you're doing that those earnings might really just be a one-time thing? Understanding where your revenue is coming from by source, it can be important to helping determine, are your expenses really in line with those items or not? And Andy mentioned this earlier, but a big component of total revenue is understanding what you're letting walk out the door in terms of write-offs and discounts, because sometimes looking back on these metrics 5, 6 months, a year down the road, you might think back and say, man, it just seemed like I was a lot more busy than that. If you do the tracking of that component, it can help you remember maybe what you're giving away, and that number might surprise you. Production by provider is kind of a big one that we use, especially for associate DVMs. A lot of times, broadly speaking, we're typically seeing compensation for a provider based on their production, usually with some sort of pro-sale agreement. And oftentimes that equates to somewhere to 20 to 22% of their overall gross production. Now, a big component of that obviously is making sure that you're tracking their production by provider accurately, and staff are inputting that data into practice software to the correct provider and making sure there's some checks and balances for accuracy there. Looking at then your expenses as a percent of total revenue can be really valuable. Once you've identified your quality of your revenue and what is really coming from services, and you can then line up the related expenses to your revenue, can be really helpful for benchmarking against industry standards and your peers overall. Looking at some of the less quantitative items, looking at your total transactions and average charge per transaction, and that can really get into your efficiency overall as a clinic, and then also the quality of what you're providing. And then it also gets at your fees, because as you benchmark that across industry standards, some of the inputs related to that are efficiency and then also the price. So if something's not lining up, it's generally one of those two components. And then the last two items kind of lump in together, but tracking your number of active patients over a period of time, and then tracking your number of new patients, because obviously keeping your current patients and then also bringing in new clients is really the lifeblood of your business. So one of the next item of our 8 components would be, is staffing really holding you back? I think we hear a lot from our clients that, hey, I'm looking to add an associate. And right now with the market the way it is, it can be very tough to find one. So if you can find a good one, great. That is a tremendous add. And it's great to get those people in the door and introduce them to your culture and build your practice out with that. Obviously, all veterinarians are very, very, very busy people. Many of them not only are veterinarians, but they do some of these items that we're indicating here, doing some of the cleaning and maintenance, running payroll, bookkeeping, just looking at some of those tasks. And is there anything that you can outsource to free yourself up for either more free time or more clinical time? Because obviously, the more time that you're able and willing to spend generating production helps your practice grow. And cleaning, bookkeeping, payroll, all those are definitely huge value items, but they're definitely something that with the right partner or the right employee can make sense to outsource and free up some of your time. Looking at continuing ed for your staff, is there the potential that by offering some continuing ed in-house or incentivizing employees to look outside for continuing ed, do you have some really rock star employees that with an additional continuing ed component might be able to get a few extra certifications, provide some other services, maybe step up with roles inside the organization, even cross-training so that staff are a little bit more flexible in their day-to-day roles can be helpful and alleviate some of the hustle and bustle that typically inflict clinics. And then lastly, is everyone on the right seat? Do you have your most talented people in the roles that best suit them? If not, is there potential to move them to a different role within your organization? Is it possible to give them additional responsibilities on top of what their initial role might be? definitely some things to consider to help kind of alleviate the bottleneck of staffing. Of course, hiring is great, but sometimes taking advantage of the talent that you have internally can be just as beneficial, if not more beneficial. So with that, we'll touch on culture a little bit. Culture now matters more than ever. It's one of the biggest things that help with employee retention. And I think everybody knows that keeping a good, efficient employee is much, much cheaper than trying to hire and retrain a new employee to get to the level that that existing employee is at. So to do that, definitely take a look at your staff benefits. Talk to your staff. See if there's specific benefits that they might be interested in that you don't currently offer, or if you're consistently hearing some pain points from them. See what you can do to address those items. And there definitely is some relatively low cost items out there. You know, I think people commonly think of offering health insurance and 401k and dental insurance, but there's even things, something as simple as offering scheduling flexibility, offering an education assistance program, which can be really great for the employee, but also offer some tax benefits for you as the practice owner. Something like that, there's a benefit on both sides, might be really appealing and add a lot of value. Present entire compensation to your staff. So when you're talking to them about compensation overall, don't just look at salary or wages and then kind of leave everything else. Present it in a way that you're showing them all the different benefits that you give, either from a monetary or non-monetary standpoint, to show them that value, because sometimes it takes a little bit of reminding. Looking at different year-end bonuses and perks. Obviously, retaining employees with a retention bonus can be really helpful. Even the little things, you know, just showing that you care can really go a long way with employees. And like Andy said earlier, get creative in terms of the recruiting aspect. Offer for some of your staff to get involved with that process. A lot of them will really cherish that responsibility and be willing to take that step and expand their horizons a little bit. They like that transparency. They like the idea of being involved with the clinic and contributing to kind of a greater goal versus just kind of coming in and doing the job and going home for the day. Now, the key with that, though, is going to be making sure that you get your best cheerleaders in front of the people that you want them in front of. So start by identifying those people that might have the urge to do that might be good at that, and let it grow from there. Definitely foster and encourage that, and encourage them to step out of their comfort zone maybe. All right, and we'll try another poll question and see if we're able to get this one compiled. But how many staff are you currently looking to hire? We are fully staffed, 1, 2, 3, or more than 3. All right. So 33% fully staffed, and then a decent, much more percentage of 1 and 2 additional hires. So seeing that we're fully staffed, that's definitely encouraging. I think we've seen this be a little bit all over the board with our clients, and some are on opposite ends of the spectrum, but seeing that at least 33% of everyone attending is fully staffed is terrific. All right, and then with that, I'm going to transition it back to Andy to talk about next steps and what's on the horizon for 2022.
Awesome. Thank you, Nate. So really quick here in the minute or two that I have left, you know, as I reflect on our webinar series here in the fall, early winter, really focus on tax strategies, you know, retirement plan options, and really your 2022 strategy. So my 3 takeaways that I want to leave you with. Number 1, really prioritize what you want to change or accomplish in 2022. You got to write it down. You have to have a plan. You have to set deadlines. You got to get your staff involved and have everybody kind of hold each other accountable. Okay. Number 2, I encourage you to know your numbers. It's too bad that poll question didn't work, because I was really interested to see how often you really look at your numbers. And so no matter how often you look at them, I encourage you to look at them more in 2022 and understand them. Find a provider that will explain them to you, okay? More and more, I'm meeting owners that set aside 1 day a month. They call it, it's my business day. They don't see patients, it's business day. And we call it, instead of working in the business, they take a day to work on the business. I really encourage you to do that as the demands on your time get more and more. And lastly, at the right time, I would love the chance to meet you, to help you understand your numbers and to help you and your practice in any way I can. So I really wish you the best here in the new year. And with that, I will send it back to Lee.
All right. Well, we knew there'd be a lot to cover. Nate and Andy, you guys did your best to get through it in as much time as possible. So great. I know, Nate, one of the things you talked about was, from a culture standpoint, looking at year-end bonuses and things like that. I would just want to apologize again for the issue we had with the polls. I can guarantee you that the person responsible will be dealt with. We will rescind her year-end bonus, and then we'll probably dock her pay, I think, too. But so we did have a few questions come in, guys. One of which I really wanted to cover, because I know we've been asked this before. What is the best way to go about price checking competitor pricing for their services and goods?
Yeah, I'll let Nate chime in quick on this too, but I'll give you two quick examples. I met with a practice owner not too long ago who honestly had an employee move from a nearby practice, and like that, overnight, they realized, boy, we really got to increase your fees. So number one, start with your staff. Number two, again, depending on the size of your community, I think you're going to have to expand this to your family and friends. But if you can just every once in a while call a neighboring practice and one of those top procedure codes, just shop around and pretend you're a patient looking to get a service, find out over time where your fees are at that way.
Those were the two exact methods I was going to say as well. I think those are the proven methods and generally get you pretty accurate answers.
All right. Well, thanks, guys. I know that was a lot to go through. As we wrap up here, I just want to let everybody on the webinar know that SVA has created a resource page, which is svaaccountants.com/vet, where the recording of this webinar will be available, as well as e-guides and past webinars, other resources specific to vets. This was the last webinar in our veterinary series, but this Thursday, we're doing our year-end tax planning webinar with a specific emphasis on recent legislation and what you need to know. So I'd just like to remind you all that the SVA team is only a phone call or an email away. So if you're a client, reach out to us as questions arise. And if you're not currently an SVA client, please reach out to me, Lee Schwartz, so I can get you connected to a subject matter expert here at SVA who can help. Thank you again for joining us today. Have a great rest of your day. And we hope to see you at our next webinar in a couple of days. Happy holidays, everybody.